Welcome. This accounting mini lecture covers equivalent units of production. Now, before we begin, let me say that this is a topic that students often find to be very confusing, okay? So let's start by talking about what we mean by the term equivalent units of production, okay? Here they give a definition. Equivalent units is a concept expressing a number of partially completed units as a smaller number of fully completed units, okay? We know that during the production process, okay, if we think about a big manufacturing process, at the end of any given accounting period, not only are we going to have produced a number of finished goods at the end of the period, but we're also going to have a lot of partially completed goods that are still out there on the production floor. Maybe they're in the finishing department, or they're in the cutting department, or they're in, of course the department's going to vary depending on what kind of manufacturing facility that we have. But I think you can kind of understand where we're going with this. There's going to be a lot of partially complete items out there. So the purpose of computing equivalent units of production is basically we want to say, well, if we had concentrated all of our time, resources, and effort into only finished goods, in theory, how many goods could we have completed this month if we didn't, if we used all of those resources that are sitting there in work in process, and if we had dedicated those only to completing finished goods. So that's kind of the theory behind what we're doing here, okay? And I think this is a fairly easy example to understand here. They show that if we have one pitcher that's half full and another pitcher that's half full, well, if we put those together, it would be equivalent to one full pitcher. So that's kind of what we're thinking about when we're looking at these partially completed goods, okay? So if we had 4,000 units that were 60% complete, we would take 4,000 times 0.6 or 60%, and that would give us the equivalent of 2,400 complete units. Okay, so here's an example. For the current period, Pencil Company started 15,000 units and completed 10,000 units. That left 5,000 units in process, which were 30% complete. How many equivalent units of production did Pencil Company have for the period? Okay, well, they have the 10,000 units that were completely finished, but then we're going to take the 5,000 units that are in process. They're 30% complete, so 5,000 times 30%. We're going to add that to the 10,000 completed units, and that gives us 11,500 equivalent units in finished product. Okay, now if we want to compute the cost per equivalent unit, we take the product cost for the period divided by the equivalent units for the period. So if Pencil Company incurred $27,600 in production costs during the period, what is the cost per equivalent unit? We would take the cost of $27,600 and divide by the equivalent units that we computed on the prior screen of 11,500, and this gives us a cost of $2.40 per equivalent unit. Now, that example was pretty straightforward in that we were just assuming that, the units were a certain percentage complete. In reality, sometimes we have material, labor, and overhead going in at different stages. So our material completion may not occur at the same rate as the labor and overhead completion. So, for example, they're just kind of showing an example of this here. In this example, we're going to assume that in stage 1, 40% of the material goes in, 25% of labor and overhead go in. Stage 2, the remaining 60% of material goes in. So at this point, we're at the end of stage 2, we're 100% complete on material. Another 25% of labor and overhead goes in. So at the end of stage 2, we're only 50% complete as far as labor and overhead goes. And then in stage 3, the remaining labor and overhead go in. An example of this might be, let's say that stage 3 was the finishing department. The product's completely put together, but maybe we just need to put some finishing touches on it. And so the only thing that goes in is labor and overhead. So if we have a process such as that, we're just going to have to take into account the rate at which materials, labor, and overhead go into the product.